our webinar today for the 2025 final steps requesting disbursement. This covers all three of our homeownership programs, the Equity Builder program, the Housing Our Workforce, and Lift Up Homeownership. And one thing before we get started, it is not pertinent to today's webinar, but if you are offering Lift Up Homeownership under the first generation component that we added, those documents are live on our website for the May 1st release. So I'm just putting a plug there if you need to communicate that information to your counterparts in underwriting. So we have a lot of information that we're going to cover. We're going to go through the submission process through our community lending platform. We're going to talk about all the pertinent documents that we need at disbursement. Some items do include covering the first-time homebuyer education, and then if we're missing information, we put files into member action required. So we'll do a little bit of technical assistance on what that looks like. We're also going to cover monitoring and retention, and we'll be referring to a lot of the documents that are on our website, including our notes and mortgages for each of the respective programs. So if you're new or you are not familiar with our disbursement process, just to level set, we like to show everybody the whole entire soup to nuts process. So in order to be eligible for this grant program, you do have to have a home buyer that has a purchase and sales agreement, and then someone from your institution will reserve what we call as the enrollment. So that's the income and that's the application package for your borrower to determine if they're eligible for one of our three programs because they are income based. And then once we do our review in accordance for the respective program, your institution will close that first mortgage. You're going to table fund the grant. And today we're going to focus on once you've closed your mortgage, you're going to request the disbursement, and that's the reimbursement for the grant. We do say it takes up to 20 business days for us to fund your institution's ideal way account, which is established at the Federal Home Loan Bank. So something to communicate to your accounting departments. And that's really just because, like, depending on when the loan's submitted and month-end reconciliation periods, that we do have a little bit of a lag time. So we added extra 5 days compared to our enrollment training. So when you're submitting a disbursement, as I mentioned, the main thing to take away is that your institution's table funding the grant, and then once you have all the required documents, you need to submit that reimbursement through our online system, which is our community lending platform. If you need to request an account, you can go on the Federal Home Loan Bank's website and you can request an account. It's very simple. Every individual who needs access to the system should have their own username and password, and please don't share accounts just because you're certifying and attesting everything that you put in here is in accordance and validated by that respective individual. We do need to have the closing disclosure reflect our grant, and our grants are not loans, so we do recommend listing it as a credit. If you know what program it's going to be, you can label it EBP grant, HOW, LUH grant, or even just Federal Home Loan Bank grant. We just don't want the misconception of listing it as a loan because these are forgivable grants after the 5-year retention period that we'll cover today. We do have our own notes and mortgages, so you need to use our current versions that are on our website. Make sure you're utilizing the right program because we do have 3 programs. Maybe you might have a borrower that might be in between and you're not sure. Just make sure you're grabbing the right instruments on the website. We can't accept any old versions, and the reason is because it refers to the year that your institution is receiving and that borrower is receiving the grant money. And essentially your institution is the lender. We're only the funder of the grant. So that's why we're going to be talking about some retention monitoring practices. Our templates are specific, throwaway, like I said, any items any versions that are from last year or even prior to. You do have to provide evidence if your customer is a first-time home buyer that they have completed the home buyer education and counseling. And then EBP and LUH do require documentation and evidence at disbursement for member concession. And then lastly, we're going to focus a little bit on, for EBP, we do allow our money to be used toward rehab, but we do have documentation that needs to be provided, and 100% of the work has to be completed. So we'll talk about those requirements into detail today. When we're talking about the documents, it's definitely important to make sure that all your documentation correlates to that respective buyer. Doing your quality control as a closer, a post-closer, if you're shipping loans or the servicing end, the name, the date, the grant amount, the address, that everything correlates to that respective disbursement. Our grant money does have to be reflected on the third page of your closing disclosure, and it should not be a separate CD. More importantly, please make sure that no more than $250 cash back, if that's applicable, to your home buyer. And if that is the case, we do have opportunities that are noted in our procedures that you would need to either first, we would recommend reducing the loan amount or the grant, but of course we do respect that a home buyer every bit counts. If there is any issues and you need to send a formal request, we will permit principal reductions, but please make sure that you're covering those parameters when you're looking at our EBP HOW and LUH procedures. The earnest money deposit must stay in the transaction. That's super important. We'll talk about some best practices, but that is a common mistake that we will see, especially if there are other grant programs being layered with ours that might allow that. We do have minimum down payment requirements that do have to be a buyer's own funding. It can't be a gift, but if they decide to contribute more than that threshold for either of the programs, they can't get that money back. So just really making sure when you're looking at your closing disclosure on that third page that if it's EBP, it's $500. So make sure there's evidence that the $500 has been contributed. That can be in the form of an earnest money or a deposit or cash to close. And that goes for all three of our programs. Do have a question regarding when should we expect to get the amended LUH agreement for first-time homebuyer eligibility? So we will be sending our written plan out to all the institutions who are already able to offer the program. We will not be sending out an agreement because it does say that at any time we can change the programs, but we will get a copy of our written plan that falls under the SPCP parameters that does include the data for the first generation. But great question. Also, just to call out too, I briefly touched upon the notes and the mortgages. We do have a deed restriction template, and that is specifically for FHA loans. And that is something that if you're submitting in the FHA portal, it'll kick it out if it doesn't have the specific document. So just please make sure if you are using FHA loans, they are permitted, but we have a specific template. And then also if you have a property that has a deed restriction, that is covered in our standard mortgage and also our note. So just want to differentiate, and the cover sheets of our instruments do explain that information, depending on your closing attorney who's executing it with your customer, if you're giving them copies in advance. And lastly, the final item that we require in the system is that first-time homebuyer certificate. So with that being said, we do get a lot of questions about what is acceptable education and counseling. The CERT certification is never required at enrollment. It is required at the disbursement. This hyperlink will bring you to our approved list, and I believe Isabella is going to be putting that in the chat too for 2025. And we gather all of these agencies through CHAPA, HUD, or National Industry Standards of Homebuyer Education and Counseling. You can also reference this information in our program procedures, because we do have a component that we will accept online education, and it can only be through eHome America, Fannie Mae HomeView, Finally Home, Framework, or Home Track, which I believe is a partnership with Freddie Mac. It's really important if you have customers that are going directly to these online education platforms that they go through an approved agency to at least get the homebuyer education and counseling. And a lot of the agencies that are listed on our approved list, they're already partnering with these online platforms, which is why we strongly recommend, if your borrower hasn't completed education or counseling, you provide that information, because essentially your organization is going to be responsible to ensure that they get that education and, more importantly, that one-on-one counseling. And that can be done before or post-closing, but you know, it's something to be mindful of in case you have a buyer that goes directly to any of these entities. So for the equity builder only, we do allow our grant money to be used toward rehabilitation upon the closing of the purchase. Be mindful, 100% of the work has to be completed prior to your institution requesting the disbursement. And we do need the closing disclosure to evidence that escrow funds. Additionally, we need supporting documentation, which can be noted in our procedures, and that entails copies of the invoices, any checks, inspections that detail the scope of work, whether it's an appraisal showing the completion, if it is a home buyer doing their own improvements, sometimes that might tend to have a little bit of lag time and additional paperwork opposed to a formal contract with a GC. And then evidence that your institution has been dispersing from that respective escrow account. So if you don't have all these elements, you aren't able to be reimbursed for the grant. We do prefer you to submit the disbursement once you have all these components, because if not, then the file is going to sit there and member action required. And we just want to really make sure that we're being mindful and transparent of this specific parameter that's only applicable for the Equity Builder program. So member concessions are applicable to EBP and LUH only. And at time of member application for your institution to apply and offer these programs, we have an exercise where they list a variety of concessions that are incentives specifically for that grant recipient that might be outside of what you would give most of your other borrowers. So here's a list of our examples, and then we also have documentation that correlates to it. This is also noted in our procedures. We have made a little bit of enhancements. If you have been using the program, we did have one area around expanded underwriting guidelines. We've kind of broken that up into some other criteria, but just to start at the top, pretty common, we see either a reduction or waiving of fees that can be reflected on the second page of your closing disclosure. So at time of disbursement, you're going to be uploading that CD, so you'll just want to upload that document when you get to the member concession question for either EBP or LUH. If it's a below market rate, we do need that rate sheet showing what that standard rate will be for your non-grant recipient, and then obviously the closing disclosure will show that there's a reduction to it. The other one, I'll go down to the bottom, that's related to the closing disclosure, is typically a lender credit, whether it's a lump sum credit or it might be specific to a fee. We see that usually on page 2 or 3 of your closing disclosure. And then the ones that I referenced that kind of fall under that expanded underwriting guidelines, they need to be things that are impactful. So the examples that we have as of 2025 is reducing or waiving mortgage insurance, or maybe some loan level pricing adjustments. So that would require a rate sheet or some pricing documentation. Maybe your institution is relaxing your minimum credit score or your debt to income ratio. So maybe you have some sort of memo or underwriting document that can correlate what you typically require and then what are you allowing specifically for your grant recipient. All this must be provided at closing. You need to explain what that concession is. Don't just say, see page 2 of the CD. Be very specific and give us that information. It just makes our review simpler. And also we do report these types of concessions to the Federal Housing Finance Agency, so it makes our review process a lot more simplified. So be very specific. And then, as I mentioned in the beginning, provide that evidence either on the closing disclosure or the other documents that would support any of these examples of concessions. Just going to do a little check here. All right, so for member action required, so typically we will place a file in MAR if we're missing documentation. Your institution has 10 business days to provide the documentation, or maybe we need some clarification in writing from your institution. If your organization needs more than 10 business days, please reach out to us and we'll work with you. An example would be if it's something that has to get recorded at the Registry of Deeds, that might take some time. We do understand that 10 business days, depending on what we're requesting, might not be doable. And then we also do have our extension policy, which I strongly recommend looking in our procedures. So we want to be able to share some reasons we put things into MAR, and here are also some solutions for that. Common mistakes include incorrect or old notes and mortgages that are executed. Ways to cure that. Obviously, if the note has incorrect information, we would want you to provide the revised note with a quality control letter. If it's the mortgage, we do understand that that's going to take some efforts and execution from your closing attorney. So either a Scrivener's affidavit or a confirmatory mortgage, depending on what the incorrect information entails. If you are seeing more than $250 cash back, as I mentioned, you can either reduce the loan amount, grant, or the principal reduction before the closing. We get sometimes the figures are a moving target as you're getting to the end, and especially if you're layering other programs with our down payment and closing cost assistance, just reach out to us sooner rather than later, and we can work with you on these areas. But that's a regulatory hard stop for us. So just really be mindful when you're looking at your closing disclosure before the actual closing date that you're working through, and ensuring that quality assurance that there's no excess more than $250. If a home buyer received their deposit back at closing, please contact us before closing. Unfortunately, we did have a couple of situations last year where we had to reduce our grant amount. So that would mean that your institution would be out of the grant money. So say you reserved $25,000 for the HOW program and they got back their $2,000 deposit, we'd have to reduce what we're reimbursing your organization. And then if you forget to provide a member concession for either EBP or LUH, you can provide us post-closing information. Primarily, I think the only option would be if you missed this checkpoint would be on the closing disclosure and then give a post consummation CD and reimburse your buyer if it's closing cost related. One question I have is, you said it takes approximately 20 days to get funded. Yes, I did say that. So some procedural reminders is that all of our grant reservations are home buyer specific, but property addresses can change. So how would this relate to somebody who's requesting disbursement? Say we've approved that enrollment, and that typically might be from your loan officer, your underwriter, whoever is setting that original reservation. You can reach out to us prior to closing and let us know if that address has changed by going into the community lending platform, and there is an option to request an address change. They are home buyer specific, so you can't swap out home buyers. It's only property addresses. Be mindful if the property address shifts from one town to another, that you want to make sure you go back to your underwriter and really affirm that the HUD area median income limits are not impacted. Usually they're just buying a different property located in that respective town or city, but something that you might just want to keep on your radar if there's a way you can flag that in your LOS system. And then a reminder, just making sure that your closing disclosure reflects the buyer's minimum contribution and that it has to stay in the transaction. So if you look at our procedures, we do note that down payment has to be a part of the purchase transaction. So it's not just the earnest money deposit. Depending on what your borrower is putting at time of offer of purchase and sales, it can be a blend of those options and cash to close, but just make sure at minimum they're meeting that respective figure. Our procedures do reference, so the Equity Builder program is $500 of the home buyer's own funds. The HOW program is $2,000, and then the LUH is $1,000. So if you're returning and using the HOW program, we used to have a different amount. We just have a flat $2,000, so it's nothing that is a percentage point of your sales price. And you'll see our FAQs are updated on our website. Just a reminder, don't list our grants as loans because they are forgivable. There's no monthly P&I, and they do belong on the third page of your closing disclosure and shouldn't be separate. Refer to our procedures for our extension policies. So for our programs, it's supposed to be 90 days from the day that we approve your enrollment for that buyer to close and submit the disbursement. If for some reason you need to request extensions for circumstances that may include if it's a new construction, maybe there's unclear title, maybe there's some information on your underwriting that you need a little bit more time. We have all of those extension opportunities listed in our procedures, and then you just would have to reach out to myself or anyone on our homeownership team to update that disbursement due date on our end. So now we're going to talk about the monitoring and retention. So you've closed the mortgage, you've submitted the disbursement, you've gotten reimbursed, and maybe you're servicing your first mortgage, maybe you're selling it on the secondary market. No matter what, you have to maintain a file for that household for 5 years. You can't sell our grant off with your first mortgage. You need to monitor it during that time. And if you look at our mortgages and notes, it is very specific that you're the lender. We only are the funder of the grant. So you're going to remain the primary contact, and you're going to provide household contact information. And this all can be referenced on their EBP, HOW, or LUH disclosure. The first 4 pages really do walk through that. I think it's between pages 3 and 4. It talks about what do I do after closing. So please keep records of the notes and mortgages and the disclosure on your end. And when somebody is either selling or they're refinancing or they're outside of that 5-year retention period, you're responsible for execution of all discharges, and we're not responsible for the recording or associated fees with that. So you would need to look at that in our procedures. One question before I go further in the monitoring and retention part, it's related to the minimum homebuyer contribution. So just to reiterate, for EBP, it's $500 minimum homebuyer contribution. For the HOW program, it's $2,000. And then for LUH, it's $1,000. And our website and our enrollment training slides do have this comparison matrix that does have all that. It's super helpful. Isabel, maybe while I'm going through the rest of the slides, if you could throw that in the chat as a resource, that way it can kind of show you the differences. That's really the only one I feel like for the retention part of in the disbursement training that you would want to reference for that material. All right, so during the 5-year retention, we're going to talk about refinancing. We're not lien sensitive, so you can request the subordination. If the homeowner decides to sell before the 5-year retention period, repayment may be due, and the Federal Home Loan Bank does that calculation. It's not a traditional payoff that might have some per diem interest. It's regulated by the FHFA. It includes a pro rata share and some other households investments to make sure that we can work through and potentially either have no money due to us or it's a lower portion. If unfortunately someone is foreclosed upon or death of an owner, it is forgiven. We just need sufficient documentation, and our mortgages and notes do cover all 4 of these areas. And then back to the whole, once the retention period has ended, the grant is forgiven, and your institution, as I mentioned, must complete that appropriate discharge. So for the subordination, traditionally, the homeowner or the attorney may contact the Federal Home Loan Bank. We're going to default them to your institution because you're going to be the one that is submitting the grant subordination to us for our legal team's review. Fortunately, we don't have a rigorous underwriting process, maybe like some other lenders that requires a package to re-review. You're just going to let us know you want the subordination. We'll provide you the template, and then you will submit that for our review and our approval. Please allow us 2 business days. And then once we've approved it, you can execute and notarize and then have that on record. And we just want you to provide us an electronic copy. It doesn't have to be the one from the Registry of Deeds, but one thing to note is before you're signing and executing it, have us review this because if we do have any minor revisions or for some reason maybe you use the wrong template because we have 3 programs, you just want to make sure that you get our approval before proceeding with the execution. So repayment, if a homeowner decides to sell during the 5-year retention, once again, if the homeowner or attorney contacts us, we're going to default back to your financial institution. That's because your organization has to execute the discharge, and then you're going to need to coordinate the efforts of obtaining the seller's closing disclosure and have that provided to the Federal Home Loan Bank. Do not try to do the calculation or have your attorneys do that. It is the responsibility of the Federal Home Loan Bank because this is a repayment calculation mandated by the FHFA for us. We will review the information and we will notify your institution if any money is owed. And then it's your organization's responsibility to coordinate the check to be provided to the Federal Home Loan Bank of Boston and then executing that discharge of the grant. And please allow us 2 business days. I know sometimes things happen and they're getting closer to the closing table and maybe you're getting a notification that they're closing the next day. If that's the situation, we recommend holding back the entire grant amount just because we're doing multiple calculations. Our mortgage and notes do go over that for every day or month that they've lived in the property from when they buy to when they sell, it's a pro rata reduction. But then there's also elements from when they bought the house and when they sell their household investment that is factored in to try to alleviate or eliminate. And then the threshold is if it is only repayment amount calculation of $2,500 or less, no funding is due back to the Federal Home Loan Bank. So that's why we really need that 2 business days and all that supporting documentation. So tips and tricks to manage that post-closing. Please do not tell the homeowner or borrower that the Federal Home Loan Bank is responsible to execute the discharge. Do reach out to our team if you have a subordination. Don't try to calculate the grant repayment because it's not like a traditional payoff. Reach out to us and then also reference the homeowner to the pages 3 and 4 of our disclosure for the post-closing information. And it does provide that detail of how we try to reduce the money due to us, and they would essentially never owe back the full grant. It would be reduced depending on how long they have owned the property. And then don't tell the homeowner that we do not allow subordinations for refinances. That could be cash out or a home equity line of credit. We promote equity within the home and we have no stipulations of what type of refinance transaction. So if your institution has some sort of requirements on your end, if they're refinancing with you directly, you would just want to be mindful that we might occasionally have a refinance repayment calculation, but that would be nothing that we're mandating at the Federal Home Loan Bank. That might just be some sort of overlay requirement on the refinance side. And then please do keep a list of your pipeline for the recipients for 5 years, especially where we have a lot of institutions that might be merging with one another. Feel free to reach out to us if you are in that position or you would like to work with us and try to see if you do have some homeowners that have received our grant and you haven't been keeping a record. And lastly, remember to execute that discharge on all fronts. All right, well, that really concludes what we're going to talk about today. I just want to leave some time for questions, and then I'll wrap this up with a couple poll questions just to test the mind on what you've learned today. So I'll just give it a couple minutes in case anyone has any last questions. And also thank you, Isabel, for putting all of those documents I referred to in the chat. I know someone had a question about the homebuyer minimum contribution. So that's in the last hyperlink on the second page of our program comparison. Both sets of procedures are in there as well, and a list of our approved homebuyer education. I do have a question. Did you state the LUE change to including first generation homebuyers is in effect May 1st? Yes, great question. So yes, effective May 1st, if you have a first generation home buyer that's ready, our website is up to date. Our FAQs are updated that defines that first generation that we covered in our enrollment, including that self-certification. And then if you have any questions about this new criteria, let us know. We will be sending all banks and credit unions a revised written plan under the SPCP that does include the insertion of the first generation in addition to people of color. We won't be sending out an agreement. It will just be a copy of that revised plan because the agreement says that it can change where this is a voluntary program. And then someone asked about the slide. So if you are looking under the handout, you'll see that there's a PDF document of the training slides from today. And then most importantly, which I find to be very helpful, is our member checklist. It really is a great way to have that quality control before you're requesting disbursement of what documents you need. And it also does cover enrollment too. So it's a full start to finish if you're using any of our grants. All right, so I'm going to do a poll. And the first question is, what online education resources are acceptable? So this is a multiple choice. So select as many as you think were applicable to today. And also a trick question, there is only 3 out of the 5 that are on here. All right, so we're going to close the poll. So there are 5 education online resources that we'll accept out of this list. It's eHome America, Finally Home, and Framework. We also did add the Fannie Mae Home View and then the Home Truck as of 2025. We won't permit the Credit Smart Freddie Mac online education or MGICs, and that's really because it's only a 30-minute high level information that doesn't really meet the spirit of how do you get somebody to sustain homeownership after they close. All right. And then who is your homeowner's main point of contact? Give it a couple more seconds. All right, so the answer to that question is your institution. All right, and one more question. Can a homebuyer receive their deposit back at closing? Right, so so the answer is no. The deposit must stay in the transaction. One question or a comment, please verify the grant mortgage is recorded in the lender, also the member's name. So yes, so when you look at our notes and mortgages, it will have a line item that you need to list your bank or your credit union. All right, so I wanted to share our contacts and resources. This is the last slide in today's training that is in the handout, but some resources that I just wanted to highlight before we conclude today's training is reviewing our website for this year's materials. I provided you the QC checklist. If you're going to the forms and applications of the Federal Home Loan Bank's website, that's where you're going to find all your notes and mortgages. Isabel was kind enough to provide the program procedures and the homebuyer education and counseling. And I strongly recommend right now clicking the technical assistance via YouTube link, because that will bring you to our TA page that will walk you through how you would submit a disbursement in the community lending platform, how you would change the address before you're requesting the disbursement and we've approved the enrollment already. It's super helpful. We always say that we have a great homeownership team, and they took a lot of time and effort to be able to provide you those quick hit videos. You might see some information from our Vice President, Livia Bork, and then we have wonderful analysts, Sam Jurgens, Jack Ryan, Isabel Tapagna, and Kevin Ryan. And then I'm Caitlin Mulhern, and I do oversee all three of these homeownership programs. So thank you so much. And the recording will be live on the website soon if you have staff that was unable to participate in the training. So thank you very much and enjoy the free time back.